What if you could generate weekly income from a highly volatile Bitcoin mining stock without owning the shares directly? Today, we're breaking down the Defiance BMNR Option Income ETF, ticker YBMN, how it works, the income strategy behind it, and who this ETF is really designed for. Welcome back to the ETF Investor. YBMN is an actively managed options income ETF designed to provide consistent weekly income while offering synthetic exposure to BitMine Immersion Technologies Inc., ticker BMNR. BitMine is a Bitcoin mining company, and like many stocks in this space, it can experience significant volatility tied to crypto market sentiment and price swings in Bitcoin. Instead of holding BMNR shares outright, YBMN gains exposure using a synthetic stock position combined with an options overlay strategy. The core objective is not long-term capital appreciation, but income generation through option premiums. The ETF uses a covered call option writing strategy, selling call options on BMNR on a weekly basis. By writing call options, the fund collects option premiums, which are intended to support regular weekly distributions. The trade-off is that upside potential on the underlying stock is capped. If BMNR rallies sharply, gains above the option strike price are forfeited. What makes YBMN different from more traditional covered call ETFs is its dynamic, actively managed approach. The fund doesn't simply sell calls at the same strike each week. Instead, it incorporates quantitative adjustments based on changing volatility levels in BMNR. As volatility rises or falls, the option strategy adapts. Strike price selection and position sizing are actively adjusted with the goal of balancing income generation and capital preservation. During periods of heightened downside risk, the strategy may adjust positioning in an attempt to limit losses, though protection is not guaranteed. Because the strategy relies heavily on BMNR's volatility, income levels can vary week to week. Higher volatility generally means higher option premiums, while lower volatility can reduce income potential. The fund seeks to maintain regular weekly distributions, but those distributions are not guaranteed and may fluctuate. It's important to understand the risks here. YBMN is exposed to derivatives risk, options risk, and single stock risk tied directly to BitMine Immersion Technologies. If BMNR declines significantly, the ETF can experience losses despite the income generated from option premiums. This is not a diversified equity ETF, and it is not designed to track the long-term performance of Bitcoin or the broader market. YBMN is best viewed as a tactical income tool for investors who understand options-based strategies and are comfortable with higher risk. If you're looking for weekly income and want exposure to Bitcoin miner volatility in a structured ETF format, YBMN may be worth understanding further. But position sizing and risk awareness are critical, and this ETF should not be treated as a core holding. If this breakdown helped clarify how YBMN works, hit the like button, subscribe to the ETF Investor, and let me know in the comments which income ETF you want covered next.